Riot Platforms, a major player in the Bitcoin mining industry, has made a bold move by raising $500 million to purchase more Bitcoin. This decision is not just a financial maneuver, but a statement of confidence in the future of cryptocurrency. By making such a substantial investment, Riot is positioning itself as a leader in the digital currency space, aiming to capitalize on the growing acceptance and integration of Bitcoin into mainstream finance. This strategic decision comes at a time when Bitcoin's price is surging, nearing the historic $100,000 mark. The timing of this investment is crucial, as the market sentiment around Bitcoin is overwhelmingly positive. Investors and analysts alike are optimistic about Bitcoin's potential to reach new heights, driven by increasing institutional adoption and global economic factors. The company's CEO, brimming with confidence, points to Bitcoin's long-term potential and the current market momentum as key drivers behind this significant investment. He believes that Bitcoin is not just a speculative asset, but a revolutionary technology that will transform the financial landscape. His vision for Riot Platforms is to be at the forefront of this transformation, leveraging their expertise and resources to maximize returns. Riot Platforms' decision to raise such a substantial sum is a testament to their belief in Bitcoin's future. The company has meticulously planned this move, considering various market scenarios and potential risks. Their strategy involves not only purchasing Bitcoin, but also expanding their mining operations to increase their overall Bitcoin holdings. The company has been steadily increasing its Bitcoin holdings, and this latest move solidifies its position as a Bitcoin maximalist in the corporate world. Riot's approach is to accumulate as much Bitcoin as possible, anticipating that its value will continue to rise over the long term. This strategy aligns with the broader trend of corporations adding Bitcoin to their balance sheets as a hedge against inflation and economic uncertainty. The $500 million will be raised through a bond offering, allowing Riot to tap into capital markets and leverage their position for further growth. This method of raising capital is advantageous, as it provides the company with the necessary funds without diluting existing shareholders' equity. The bond market's response to this offering will be a critical indicator of investor confidence in Riot's strategy and the broader acceptance of Bitcoin as a viable investment. This bold move by Riot Platforms is sending shockwaves throughout the financial world. Analysts are closely watching how this significant investment will impact the company's financial health and market position. The decision has sparked debates among financial experts about the sustainability of such a high-stakes bet on a volatile asset like Bitcoin. It underscores the growing acceptance of Bitcoin as a legitimate asset class by institutional investors. More and more companies are recognizing the potential of Bitcoin to diversify their portfolios and provide substantial returns. Riot's move could pave the way for other corporations to follow suit, further legitimizing Bitcoin in the eyes of traditional finance. The company's decision to issue bonds to purchase Bitcoin is a novel approach, and it will be interesting to see if other companies follow suit. This innovative strategy highlights Riot's commitment to staying ahead of the curve and exploring new financial instruments to support their growth. The success of this bond issuance could set a precedent for other firms looking to invest in Bitcoin without directly impacting their cash reserves. The success of Riot's gamble hinges on Bitcoin's price trajectory. If Bitcoin continues to appreciate, Riot stands to gain immensely, reinforcing their position as a leader in the cryptocurrency space. However, the volatile nature of Bitcoin means that the company must be prepared for potential fluctuations and market corrections. If Bitcoin continues its upward climb, Riot will reap substantial rewards. The company's foresight and willingness to take calculated risks could pay off handsomely, providing a significant boost to their financial performance and shareholder value. However, if the market takes a downturn, the company could face significant losses. The high volatility of Bitcoin means that Riot's investment is not without risks. The company must navigate these challenges carefully, balancing their ambitious goals with prudent risk management strategies. Only time will tell if Riot's bet will pay off, but one thing is certain: the company is all in on Bitcoin. Their unwavering commitment to this digital asset reflects a broader trend in the corporate world, where more companies are beginning to see the value and potential of cryptocurrencies. Riot's journey will be closely watched by both supporters and skeptics, as it could shape the future of corporate investment in Bitcoin. Riot Platforms is utilizing convertible notes to secure the $500 million war chest. This strategic move is designed to bolster their financial position and provide the necessary capital to expand their operations. This financial instrument offers investors the flexibility to convert their debt holdings into equity in the company at a later date. Essentially, it provides a dual benefit, the security of debt with the potential upside of equity. This approach allows Riot to access capital at potentially lower interest rates compared to traditional debt financing. By leveraging convertible notes, Riot can minimize their cost of capital while still securing substantial funding. Convertible notes present a win-win scenario for both Riot and investors. Investors gain the opportunity to become equity holders in a promising company, while Riot benefits from immediate liquidity. For Riot, it provides immediate capital to capitalize on the current Bitcoin bull run. This influx of funds allows them to scale their mining operations and invest in cutting-edge technology. For investors, it offers the potential for future equity ownership in a company at the forefront of the Bitcoin mining industry. This potential for equity conversion can be particularly attractive in a rapidly growing market. The structure of these convertible notes reveals Riot's strategic thinking. By setting the conversion terms favorably, they align the interests of the company and its investors. The conversion price of the notes is set at a premium to Riot's current stock price, incentivizing investors to hold the notes until conversion. This premium acts as a buffer, ensuring that only those truly committed to the company's long-term success will convert. This mechanism could potentially bolster Riot's stock price in the long run. As more investors convert their notes to equity, the increased demand for shares can drive up the stock price. This innovative financing approach highlights the evolving landscape of the cryptocurrency industry. Companies are increasingly adopting sophisticated financial instruments to stay competitive and capitalize on market opportunities. As institutional interest in Bitcoin grows, companies like Riot Platforms are finding new and creative ways to gain exposure to this emerging asset class. The use of convertible notes is just one example of how traditional financial strategies are being adapted for the crypto world. The use of convertible notes is a testament to the growing sophistication and maturity of the cryptocurrency market. As the industry continues to evolve, we can expect to see even more innovative financial solutions being implemented. Bitcoin's price has been on a tear, surging to new heights and captivating the attention of investors worldwide. The cryptocurrency is currently flirting with the $100,000 mark, a level previously thought unattainable by many. This remarkable rally is fueled by a confluence of factors, including increased institutional adoption, growing mainstream awareness, and favorable macroeconomic conditions. Major players in the financial industry, such as Tesla, MicroStrategy, and Square, have added Bitcoin to their balance sheets, signaling a growing acceptance of the cryptocurrency as a store of value and a hedge against inflation. This institutional interest has injected billions of dollars into the Bitcoin market, propelling its price upwards. The recent influx of institutional capital has created a sense of FOMO, fear of missing out, among retail investors, further fueling Bitcoin's price surge. As more people jump on the Bitcoin bandwagon, the cryptocurrency's limited supply becomes increasingly scarce, driving up its value. Bitcoin's ascent has been nothing short of remarkable. The cryptocurrency has outperformed all other asset classes in recent years, generating eye-popping returns for early investors. As Bitcoin continues to gain mainstream acceptance, its price is expected to remain volatile but with a long-term upward trajectory. Section 4. Riding the Wave. Riot's bullish rationale. Riot Platforms' decision to purchase Bitcoin at its current price point is a calculated gamble based on several key factors. Firstly, the company is betting on the continuation of the current Bitcoin bull run. With institutional adoption on the rise and mainstream awareness growing, Riot believes that Bitcoin's price has further room to run. Secondly, Riot is factoring in the upcoming Bitcoin halving event scheduled for 2024. This event, which occurs approximately every 4 years, will reduce the rate at which new Bitcoins are created, potentially leading to a supply squeeze and a subsequent price surge. Thirdly, Riot is capitalizing on the current favorable regulatory environment surrounding Bitcoin mining in the United States. The company's mining operations are primarily based in Texas, a state that has been actively courting Bitcoin miners with its abundant renewable energy sources and crypto-friendly regulations. Riot Platforms' bullish outlook is shared by many analysts and industry experts who believe that Bitcoin is still in the early stages of its adoption curve. As more people and institutions recognize the value proposition of Bitcoin, its price is expected to continue its upward trajectory in the long run. Section 5. High Stakes, High Reward. Navigating Bitcoin's Volatility. While Bitcoin's potential upside is undeniable, it's crucial to acknowledge the inherent risks associated with this highly volatile asset. The cryptocurrency market is known for its unpredictability, and Bitcoin, being the most prominent digital currency, often experiences the most dramatic price fluctuations. This volatility can be both a blessing and a curse for investors. Bitcoin's price is known for its wild swings, and investors can experience significant losses in a short period. For instance, a sudden regulatory announcement or a major hack can send prices plummeting within hours. Conversely, positive news such as institutional adoption or favorable legislation can cause prices to skyrocket just as quickly. Riot Platforms' decision to allocate a significant portion of its capital to Bitcoin exposes the company to this market volatility. This move is not just a financial decision but a strategic one, reflecting their belief in Bitcoin's long-term potential. However, it also means that the company's financial health is closely tied to Bitcoin's market performance. Critics argue that purchasing Bitcoin at its current all-time high is a risky move. They caution that the market could be in a bubble and buying at the peak could lead to substantial losses if the bubble bursts. Historical patterns have shown that Bitcoin's price can be highly cyclical, with periods of rapid growth followed by sharp declines. They point to previous Bitcoin bubbles that have burst spectacularly, leaving investors with heavy losses. The infamous 2017 crash, for example, saw Bitcoin's price drop from nearly $20,000 to around $3,000 within a year, wiping out billions in market value and causing widespread panic among investors. The fear is that Riot Platforms could be left holding the bag if the market experiences a significant correction. Such a scenario could have severe implications for the company's financial stability and investor confidence. The stakes are high, and the potential for loss is very real. However, Riot Platforms is no stranger to Bitcoin's volatility. The company has been involved in Bitcoin mining for years and has developed strategies to manage the risks associated with this volatile market. Their experience in navigating previous market cycles gives them a unique perspective and a level of resilience that newer entrants might lack. As a Bitcoin mining company, Riot has weathered previous market cycles and emerged stronger. Their ability to adapt to changing market conditions and their deep understanding of the Bitcoin ecosystem are significant advantages. This experience has equipped them with the tools and knowledge needed to make informed decisions in a highly unpredictable market. The company's management team has a deep understanding of the Bitcoin market and is confident in its ability to navigate its inherent risks. They have implemented robust risk management strategies and continuously monitor market trends to make timely adjustments to their approach. Ultimately, Riot Platforms' decision to purchase Bitcoin at its current price is a calculated risk. They are betting on the long-term potential of Bitcoin, believing that the rewards will outweigh the risks. This decision reflects their commitment to being at the forefront of the cryptocurrency industry. The company is betting on the long-term potential of Bitcoin, even if it means enduring short-term volatility. They believe that Bitcoin's value will continue to grow over time, driven by increasing adoption and technological advancements. This long-term perspective is crucial for navigating the ups and downs of the market. Only time will tell if this gamble will pay off. But one thing is certain: Riot Platforms is fully committed to Bitcoin. Their dedication to the cryptocurrency market and their strategic approach to managing its volatility demonstrate their belief in Bitcoin's future. Whether this bet will yield the desired results remains to be seen, but Riot Platforms is prepared to face the challenges head-on.